Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set for a strong start on Monday, tracking Asian peers as markets priced in earlier interest rate cuts in the United States. GIFT Nifty signals a positive start coming in for Dalal Street, and the US market ended higher on Friday as bond yield fell sharply after data showed sign of slowing, essentially US job data growth. Asian stocks surged on bullish tailwind from US rally, and FIIs they continue to offload shares worth around 12 odd crore, and DIIs they have bought in equities to an extent of 402 odd crore. In terms of FII, in the FNO space, FII continues to be the net buyer to an extent of 1,022 crore and net sellers to an extent of 5,797 crore in index options. For the net they have been net buyers in stock futures to an extent of 2,389 crore, along with being buyers in Bank Nifty futures, where they've been selling off is Bank Nifty options. What still remains in ban is GNFC. In terms of what we have as a sentiment indicator, Nifty PCR, it's at 0.96 versus 1.01. But let's discuss the trade setup strategies for the day along with Prashant Sawant, who's the co-founder at Catalyst Wealth. Morning there, Prashant.
Good morning, Nickey, and good morning to all the viewers.
All right. Straight off, start with your trade setup strategies out there, given the kind of setup that you're sitting in on account of risk, improved risk appetite, the levels, immediate support and resistance for Nifty and Bank Nifty.
So I think, Nickey, after forming a base at somewhere around 18,800, 18,900, Nifty has shown a strong pullback. Now the major resistance in futures level happens to be 19,500, 19,540. So I think any pullback over here, one should trail the long positions closely and try to book out. Where do you initiate fresh longs? My suggestion would be once you get a closing in futures about 19,540, 550 zone, that is a zone where you can look at initiating a fresh position with a stop loss around 19,450, which would be a 100-point risk, and to then look for targets around 19,650, 19,700. So for me, for this week ahead, which I think 19,500, 540 zone in futures happens to be a make or break zone from an index perspective. As long as the downside is concerned, I think 19,300, 350 zone is a strong support for now. And as long as that holds, one can look at accumulating. Along with this, if you look at Bank Nifty, it has been a laggard as compared to Nifty and has shown a lot of weakness. So currently, if you look at the pre-open, we are looking at almost a 300-point pre-open, and that should take the future somewhere to around 43,800 on an opening basis for the week. Overall for the week, 44,200 in futures will be a make or break level, and one needs to track that on closing basis. If we close above 44,200, I think the doors will open for 44,800, which would be a straight 600-point rally. But as I said, 44,200 on the upside happens to be a major resistance. And if you look at the support zones, I think 43,200 is a make or break zone on the downside. So we are right in the middle of the zone for both Nifty and Bank Nifty. And I think whoever is holding the longs would definitely try to take advantage of the open. But my suggestion would be to not chase the open and wait for the right opportunity.
Sure. The other question for you, Prashant, of course, is bunch of PSU names have reported in their earnings. State Bank of India is the first one among them. Of course, that's the major one. Bank of Baroda is the second one. And the third one, of course, we're looking at Bank of India too, along with a few other names. Could you suggest which one look attractive from the charts on the technical levels?
So I think, Nickey, if we look at SBI, which is the leader in the pack, I think it has a strong chance of a pullback trade up to 595, 600 levels, which if you plan from a risk to reward perspective is a very good risk reward ratio. So we are currently at 578 and looking at zones around 598, 600, which will be around 20, 22 points from here. And your stop loss will be hardly 574, 572. So one can definitely plan a long on SBI. I think that looks the best from the pack.
Sure, Prashant. Also, could you have more two recommendations coming in for our viewers, which you think will be profitable strategies going forward?
So, Nickey, I think for the week, I'm looking at a mix and match strategy. One would be a stock which is at a support, has shown a strong pullback. One would be a breakout stock. So the stock which is at a support and has high chances of showing a big up move is IRFC. My stop loss would be 65 and target would be 84. And the breakout stock would be Zomato. My stop loss would be 105. And I'm looking at around 135 odd levels on this stock.
All right, Prashant. Those were the clearly two quick takes. Let's address the market opens there for you. Well, it is on a good start, 19,300 mark, well above that level, comfortably sitting above that level. 0.5% clocked in for Nifty 50 index right now. It's doing well in trade, just in line with what we anticipated. Let's talk about Bank Nifty. How is that stacking up for you? Well, Bank Nifty also is doing well, and we're seeing gains to an extent of 0.5% coming in for Bank Nifty index. Well, in line with the larger counterpart, there is per se good sentiment, at least at the start of the trade. Let's also look at the mid cap and the small cap performance, just to see if we're looking at some amount of outperformance coming in from those indices. Mid cap index, of course, we're seeing 0.6% of gains coming in for the mid cap basket, and small cap. Well, the trend is no different for that one, a bit of outperformance rather. Percent of gains coming in for the small cap index. Let's look at State Bank of India, where another strong quarter, and it seems like well positioned to sustain the growth momentum. State Bank of India is clearly the stock of the day that you need to watch out for, apart from Bank of Baroda and Bank of India. These are essentially three PSU companies which have reported in their numbers. Apart from that, new age companies. These two sectors are expected, themes are expected to be in focus. Bank of Baroda right now is just weighing down on the sentiment, and a bit of losses coming in for that one. But let's quickly move on to the Nifty indices and PSU Bank Index. Essentially, that's the sector that we need to watch out for in trade today. PSU Bank right now isn't really doing too well. 0.1% of losses coming in for that one. Do bear in mind the fact that the last week recovery that we saw was essentially on account of private banking numbers that came in and lifted the sentiment higher. But if you look at the PSU banks right now, well, the index isn't really doing well. On the flip side, you have State Bank of India, which is doing rather well. Nifty IT also has clocked in some amount of gains to an extent of 0.5% out there. The pharma is also doing well. Apart from that, let's look at metal index, because that's been the one that you need to keep an eye out on after apparently some amount of volatile moves. But the numbers have been rather encouraging from the entire metal space, so to say. It's gains to an extent of 1% out there, close to 1%. But let's move on to the Nifty gainers and the Nifty losers, just to see how the trend has been shaping up overall for the trade. Adani Enterprises, Hindalco and Coal India. These are some of the stocks that have top gainers today, and Grasim along with Hero MotoCorp and JSW Steel. These are some of the other names that we have. Clearly, it is a day which is essentially dominated by the metal names, at least when it comes to the top gainers. NTPC, Adani Ports and L&T. These are some of the other top gainers that we have on the list. Apart from that, let's look at top losers. In terms of top losers, we yet to update that list, but advances, there are no losers there. The market sentiment is extremely positive right now. You have advances, all the stocks right now in green, and none of them are actually in red. So that's a good start to the day, but let's get going on the stocks that you need to watch out for. Before that, we'll go to Prashant and check with him. Prashant, what do you make out of this market open?
So I think, Nickey, as expected, the market opening has been good. And I think one stock that I am closely tracking is Kotak Bank. If you see, it's currently quoting around 1740, 1745 zones. I think this looks good to move to levels around 1780, 1790, maybe even 1800. And one can use the gap support on daily chart and maintain a stop loss at 1730. So once again, the risk to reward here is good. It's in a strong consolidation zone and in the center of the zone. So that's why I'm targeting the upper level of the zone, which happens to be 1800.
All right. Let's also look at the other companies that we have. Let's essentially address in the stocks and news rather. State Bank of India has rather come up with numbers, and it's an encouraging set that we are looking at. Of course, a bit of disappointment has crept in from Bank of Baroda overall, but basic numbers there on the screen for you. It's essentially State Bank of India, stocks and news. Q2 has seen in a healthy growth in total income, which is led by a resilient NIM. Apart from that, Q2 has also seen in an inline loan growth, sharp sequential jump in operating expenses on account of an increase in provisional expenses for State Bank of India. But overall, you really have a little bit of fairly decent set of numbers. But right now, you're seeing some amount of selling pressure creeping into this one. Bank of Baroda, a mixed set of numbers essentially. The net profitability is up by 28%. NIIs are up by 6.5%. If you look at the asset quality, well, it has improved. Gross NPAs can come in at 3.32 versus 3.51, and net NPAs come in at 0.76. A tad bit of improvement. Nevertheless, it is an improvement that we're looking at. But overall, if you look at the numbers, pretty mixed set of numbers reported in by Bank of India. Apart from that, let's also look at what we have for Bank of India. Bank of India is doing well. The stock has shot up in trade as much as a percent. Net profitability up by 50%. NII is up by 12.9%. You're seeing an improvement even on the asset quality front. NPAs have, gross NPAs at least, have come in at 5.8% as compared to 6.67% sequentially. That's a drastic amount of improvement. And net NPAs also have improved at 1.54 versus 1.65. So that's the reaction that you're seeing in, and the stock is doing well in trade. Well, Vedanta, where another, look at the net losses, the company, it's gone at one-time adjustment. Revenue is shot up by 6.5% and EBITDA is up by 52% overall for Vedanta. The entire metal pack is doing well. Prashant, quickly, one last take that you have. What do you make out of the metal counters? Does anything look interesting to you within that space?
So I think, Nicky, I've been tracking it closely, and I think one stock which can be a good pullback trade. Overall, the sector is weak, so we are only looking at pullbacks. Why I'm using this word is so that the quantity can be kept lesser. And I think you can look at Jindal Steel, which may look at there's a gap which is around 640 zone. So currently we are quoting 607. I think we can maintain a stop loss at 595 and look for targets around 635, 640, which happens to be a good 5-6% from here. So in the metal pack, I think Jindal Steel can outperform.
All right, Jindal Steel is the one that we're clearly looking into. Apart from that, we've also spoken about few other names. But Prashant, we're just going to leave it at that. And thank you for taking out the time and joining us this morning. All right, let's quickly navigate our conversation now towards getting the fundamentals right. Unmesh Sharma, who heads the Institutional Equities for HDFC Securities, joins us. Morning there.
Good morning.
All right, what do you make out of the current which direction do you see the markets are headed? It seems like a good start for now. The last week also we saw some amount of recovery which crept in the later half of the week, mainly on account of also private banks. But what's the sentiment for PSU banks and the drivers for the market going ahead?
I think markets really being driven by the top down at this moment in time. I think the macro is what is driving. If you see the commentary from all the traders every morning, it's really down to what the global cues are. At this moment in time, I think this week, the most important thing now with Fed and RBI out of the way, it really comes down to individual data. If you look at the farm payrolls, which happened on Friday, that has given, there has been a very sharp movement in the US bond yield because of that, because any sign that, the rate hikes are working and the economy is slowing leads to views that the rate hike cycle may have ended. And hence, people can start then focusing, of course, on what happens next year with when the rate cuts will come through. So, in the short term, I would say, in a scenario with so much uncertainty, I think at least in the short term, there seems to be a little bit on risk on trade, which has happened. The markets also come off, 1,100 points, which seems to be giving a little bit of comfort, at least in the short term, to the traders.
Sure. I wanted to extensively talk about the PSU bank numbers. What do you make out of it? State Bank of India reported an asset quality ratio, which was perhaps the best or the highest that we have in multi-decadal. SMA book has declined there, but Bank of Baroda, on the other hand, you've just seen higher other income essentially boosting in the earnings, and margins have come down. How do you read into it? Does it seem like a dichotomy of sorts for the PSU banks, and you think the rally is overdone for these names?
No, so if you, I'll try to put this in context of our model portfolio and how we are seeing the PSU banks. If you look at banks in general and you look at all the stocks which have reported so far, I think the one conclusion that you can draw is that to a large extent NIMs have kind of peaked. Okay, there is while there's no evidence of the asset cycle turning at the same point in time, there seems to be some anecdotal evidence coming through that on the unsecured lending side, there could be some issues. And with the PSUs, you have this added complexity of the mark to market on the bonds. So you put all that together, honestly, the numbers have been okay. There is not much to read in there, but if you look at the commentary, we would keep a close eye on is how fast the NIM compression happens, and if the asset cycle turns. Now, in this cycle where if the asset cycle continues to remain strong and positive, I think we can continue to remain invested in the PSUs. In our model portfolio, we do have State Bank in there. What we think will, however, happen is incrementally is that I think being down the quality curve on the banks is not something that we are proposing. If you look at the way in which we have positioned ourselves in our model portfolio as well, State Bank pretty much is the only one, which is in there, which is an equal weight. Which is an equal weight. And apart from that, we have none of the other names in there. It's all private.
Okay, so that's pretty much a takeaway there. But I was also looking at the new age companies per se. PB Fintech to begin with, net loss of around 198 crore versus the loss of 184 crore. EBITDA margins have, however, there is a turnaround which has taken place at the operational front for PB Fintech. The adjusted EBITDA is at 13 crore versus the loss figure of nearly 53 crore. So that's a bit of a surprise if you can look at just the charts. Also for PB Fintech, apart from that, Zomato there. Another quarter of strong beat. Blinkit continues to surprise. Now, within the new age companies, what do you like and why?
Okay, so look, PB Fintech's not under coverage, so unfortunately I can't comment on that. What I can tell you is that amongst the new age companies, our view right from the start, in fact, including what we had commented on this channel and your sister channels, is that we had taken a portfolio approach on that. We believe we have always been believers. If you look at our model portfolio as well as the style in which HDFC Securities, Institutional Equities sending out recommendations is really, we look at profitability, tend to be generally focused on, value. And, on usual screeners, these are not names which would actually show up. So in history, we've not had any of these names in there. In fact, if you look at our model portfolio, even at this moment in time, even in the consumer space, it's all relatively old economy, if I may call it that, Hindustan Lever, ITC, Britannia, United Spirits, Nestle, with really overweight only on the United Spirits. So at this moment in time, we continue to remain away from this sector. We believe that with the valuations having come off and companies now focusing on profitability, there are some pockets which are interesting. But right now, in our top 50 names, at least, we don't have any of them.
You don't have it right now, but are you contemplating after the turnaround that we've seen on the operational level of these companies, at least so to say for PB Fintech, which seems to be a break-even story on the operational front? Would you consider reassessing them, or would you be a skeptic there and perhaps waiting for more quarters to be clocked in and finally the bottom line showing some amount of profitability for you to consider it as an investable bet?
No, so we are looking at some of these names at the same point in time. So specifically on PB Fintech, I can't comment, but at the same point in time, what we are looking for is a lot of these companies, especially the ones which are also coming to market now. What you would have seen is that the clear view is either they need to be profitable at least at the EBITDA level, or looking at profitability over the next few quarters, or a clear line of sight to do that. So definitely keeping a close eye on that. On the QSR names, for example, we wrote a report, and we seem to be positive on some of these names. Not yet positive enough to be included in our model portfolio, but yeah, definitely keeping a close eye on that. We've also initiated on a few of these in the recent past, and I think that some of these could get included in the future.
All right, brilliant on that. Thank you so much for taking out the time and speaking to us. We're just going to leave it at that.
Thank you.
Your pleasure. Well, this is it when it comes to opening bell, but what you also need to catch up is an MC exclusive interview with JP Morgan's Emerging Economies head Jahangir Aziz on why freebies announced so far won't have a negative impact on state finances and why he sees growth slowing down in the second half of the current fiscal. Well, also some expectation in terms of the growth out there. Tune in at 11 a.m. to catch up with the entire interview. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. And please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.